What just happened? Trump just put the brakes on his hard-hitting tariffs against Mexico and Canada, but only for 30 days. Is this a strategic masterstroke or just another move in an escalating trade war? And most importantly, what does it mean for your wallet and investments? Trade wars aren't just some government squabble. They affect everything from the cost of your morning coffee to the performance of your 401k. Today we'll break down why Trump hit pause on tariffs and what he really wants in return. What this means for Wall Street, businesses, and your investments. The stocks that could benefit and the ones that could get crushed. A surprising development involving the U.S. government and TikTok? If you want to stay ahead of the game in this economic roller coaster, hit that like button, subscribe, and let's dive in. The trade war just took an unexpected turn. Trump's administration slammed 25% tariffs on Mexico and Canada, plus a 10% tariff on China. But within days, everything changed. Over the weekend, stock futures tumbled and markets reacted violently. Then, a sudden shift. Trump announced a temporary pause on tariffs for Mexico and Canada, granting them a 30-day window in exchange for border security commitments. Mexico agreed to deploy troops to seal the U.S. border. Canada is pouring $1.3 billion into border security. Meanwhile, the fate of China's tariffs remains unclear. The question now, is this a strategic play or just kicking the can down the road? While Wall Street breathed a sigh of relief, uncertainty remains. Is Trump setting up a new wave of tariffs next month or preparing to negotiate something bigger? Markets hate uncertainty, and this move created both relief and speculation. Winners: U.S. energy companies, especially domestic oil and gas producers, Amazon and other e-commerce giants who rely less on Chinese imports. Investors betting on infrastructure growth in the U.S. Losers: manufacturers with international supply chains, think auto parts, steel, and construction. Retailers dependent on foreign-made goods. Home builders and real estate markets, more on that in a sec. But wait, there's another wild card in all of this, and it involves TikTok. Just when you thought the trade war was all about goods and tariffs, a new player enters the chat: TikTok. There's growing speculation that the U.S. government could create a sovereign wealth fund to invest in acquiring TikTok's U.S. operations. What does that mean? If the U.S. does this, it sets a precedent for direct government intervention in private tech companies. It could reshape global tech power dynamics, shifting the balance away from China. Big tech stocks like Meta and Google are closely watching this. Would this move boost U.S. innovation or set a dangerous precedent for government overreach? Let me know what you think in the comments. Now, let's talk about which stocks could take a hit if tariffs return in full force. Stock to sell number 1, Stanley Black & Decker, SWK. Heavy reliance on Chinese supply chains. 25% of their parts still come from China. If tariffs return, power tool prices will skyrocket. Bad news for contractors and DIYers. Down 25% since October. More pain ahead if tariffs aren't fully lifted. Stock to sell number 2, Home Depot. HD 25% tariffs on Canadian lumber equals higher prices for home renovations and new builds. High mortgage rates already slowing home construction. Tariffs could make it worse. Stock is up 15% this year, but valuations look stretched. Potential downside ahead. Now for the good news, not all companies are at risk. Some could actually thrive in this environment. Stock to buy number 1, Coterra Energy, CTRA domestic oil and gas producer, not impacted by tariffs. Rising energy prices could boost profits. Dividend yield of 3% and strong growth ahead. Stock to buy number 2, Amazon, AMZN. Limited reliance on Chinese supply chains. Third-party sellers take the hit. AWS and advertising revenue growing fast. Massive e-commerce moat crushing competition like Temu. Oh, what should you do? If tariffs return, avoid international supply chain stocks like Home Depot and Stanley Black & Decker. If the trade war escalates, domestic energy and tech companies like Coterra and Amazon could be big winners. And if TikTok gets acquired, expect fireworks in the tech sector. The situation is evolving fast, and I'll be tracking every update. Question for you. Do you think Trump will extend or cancel tariffs next month? Drop your thoughts in the comments. Subscribe for more market insights, and make sure to hit that like button to keep getting these breakdowns. See you in the next one. Like this video if you found it helpful. Comment your thoughts below, let's discuss.